Ever heard of the Trump tax cuts? Officially known as the Tax Cuts and Jobs Act of 2017, or TCJA, it was one of the most significant pieces of legislation during the Trump presidency. It promised to supercharge the U.S. economy, create jobs, and make American companies more competitive globally. One of the biggest and most permanent changes was a massive cut to the corporate income tax rate. Before the TCJA, the top federal rate for corporations stood at 35%, one of the highest among developed nations. The TCJA slashed this rate dramatically down to 21%. The act also shifted the U.S. from a worldwide tax system where U.S. companies were taxed on their global profits towards a territorial system. This new system primarily taxes profits earned within the United States. A key goal here was to encourage companies to bring back, or repatriate, trillions of dollars parked overseas. The argument for this proponents claimed these corporate changes would incentivize businesses to invest heavily within the U.S., lead to significant job creation, boost worker wages, and make U.S. companies more attractive and competitive on the global stage. The TCJA also brought widespread changes to individual income taxes. However, unlike the permanent corporate cuts, most of these changes are temporary and set to expire. This is a crucial point. Key changes included increased standard deduction. The amount of income shielded from tax by default was nearly doubled. This simplified tax filing for millions, as fewer people needed to itemize deductions. Elimination of personal exemptions. The deduction taxpayers could previously claim for themselves and each dependent was removed. Cap on state and local tax, SALT deductions. This was highly controversial. The amount of state and local taxes, like property and state income taxes, that individuals could deduct from their federal taxes was capped at $10,000 per household. This hit taxpayers harder in high-tax states. Increased child tax credit. The value of the tax credit for qualifying children was raised. Repeal of the ACA individual mandate penalty. The tax penalty for not having health insurance under the Affordable Care Act, or Obamacare, was effectively eliminated starting in 2019. Again, it's vital to remember nearly all these individual tax changes are scheduled to expire automatically after December 31st, 2025, unless Congress acts to extend them. So, what were the results? This is where the debate really heats up, and economists still disagree on the long-term effects. Arguments for success. The U.S. economy did see a period of accelerated growth following the TCJA's implementation, though separating its effect from other factors is complex. The unemployment rate reached historic lows before the COVID-19 pandemic. There was evidence of companies repatriating foreign profits and some businesses offering one-time bonuses or making new investments, although the scale is debated. Criticisms and negative outcomes, soaring national debt. Major tax cuts without corresponding spending cuts led to a significant increase in the federal budget deficit and the national debt, projected to add trillions over the decade according to nonpartisan bodies like the Congressional Budget Office, CBO. Uneven benefits. Critics strongly argue the largest, most lasting benefits flowed to large corporations, with their permanent cut, and the wealthiest individuals. Benefits for middle-class families were smaller and temporary. Business investment disappointment. Many economists argue the expected surge in business investment didn't fully materialize. A large portion of corporate tax savings went towards stock buybacks, benefiting shareholders, rather than long-term capital investment or substantial wage increases for workers. Limited wage growth. Real wage growth for the average worker remained relatively modest compared to corporate profit gains. As we've mentioned, the clock is ticking. The expiration of the individual tax cuts at the end of 2025 creates what some call a fiscal cliff. The Biden administration, and whoever occupies Congress and the White House after the upcoming elections, will face major decisions. Will the cuts be extended? Will taxes go up for millions of Americans? Will corporations face new tax changes? This guarantees tax policy will remain a central political and economic battleground in the coming years. So, the Trump tax cuts, or TCJA, were a landmark policy shift with complex and contested consequences. It delivered a significant permanent tax cut for corporations, while offering temporary relief for many individuals, albeit structured in a way that generated winners and losers. The undisputed outcome? A substantial increase in the U.S. national debt. Did it achieve its primary goals? The answer depends heavily on your perspective and which metrics you prioritize. Economic growth occurred, but at the cost of higher debt and ongoing debates about fairness and who benefited most. With the 2025 expiration date looming, the story of this tax overhaul is far from over. What are your thoughts on the Trump tax cuts? Were they a net positive or negative for the U.S. economy? Let us know your perspective in the comments section below. If you found this breakdown helpful, please give this video a like and be sure to subscribe and click the notification bell so you don't miss our future content. Thanks for watching.